Overview of the New Income Tax Bill 2025. The New Income Tax Bill 2025 is a comprehensive legislation aimed at reforming the income tax system in India. The bill seeks to address various issues that have plagued the tax system, including complexity, ambiguity, and disputes. The proposed legislation is expected to bring about significant changes to the tax compliance process, reducing the burden on taxpayers and enhancing the overall efficiency of the tax system. Key objectives of the New Income Tax Bill 2025. Streamline tax compliance. The bill aims to simplify the tax compliance process by introducing a new tax filing system, which will reduce the complexity and burden on taxpayers. Reduce disputes. The proposed legislation seeks to reduce disputes by introducing a new dispute resolution mechanism, which will provide a faster and more efficient way of resolving tax disputes. Enhance clarity. The bill aims to enhance clarity in the taxation process by introducing a new set of rules and regulations, which will provide a clear and transparent framework for taxpayers. Key provisions of the New Income Tax Bill 2025 **** Key provisions of the New Income Tax Bill 2025 Simplified tax filing system. The bill introduces a new tax filing system, which will reduce the complexity and burden on taxpayers. Here are some of the key features of the New Income Tax Bill 2025. Key features of the New Income Tax Bill 2025 Simplified tax filing process. The bill proposes to introduce a new tax filing system that will reduce the complexity of the current system. This will be achieved through the use of a single, unified tax filing platform that will allow taxpayers to file their returns electronically. Reduced tax rates. The bill aims to reduce tax rates across the board, with the goal of making the tax system more equitable and fair. Simplifying tax laws. The proposed tax bill seeks to simplify tax laws by reducing the number of tax brackets and eliminating certain tax credits. This will make it easier for taxpayers to understand and comply with tax regulations. Key changes to tax brackets. Plus reducing the number of tax brackets from 15 to 10, plus eliminating the 10% tax bracket, plus consolidating tax brackets to reduce complexity, eliminating tax credits, plus eliminating the Earned Income Tax Credit, EITC, plus eliminating the Child Tax Credit, plus consolidating other tax credits to reduce complexity, streamlining tax administration. The proposed tax bill also aims to streamline tax administration by introducing new technologies and processes to improve efficiency and reduce costs. The need for tax reform. The current tax system in the United States is complex, with multiple tax laws and regulations that can be difficult to navigate. This complexity has led to frustration among taxpayers, who often find themselves struggling to understand the rules and regulations that apply to them. The need for tax reform has been a pressing issue for many years, with various stakeholders calling for a more streamlined and simplified tax system. Unified Tax Bill streamlines fiscal policy for taxpayers. The Unifying Tax Bill, a comprehensive approach to fiscal policy. The introduction of a unified tax bill is a significant development in the realm of fiscal policy. This comprehensive approach aims to integrate various tax changes announced in the national budget, providing a clear and concise framework for taxpayers to navigate. By doing so, the bill seeks to promote transparency, simplify compliance, and enhance the overall efficiency of fiscal policies. Key features of the Unifying Tax Bill. Unified framework. The bill will establish a single, unified framework for tax changes, making it easier for taxpayers to stay informed and comply with new rules. Simplifying India's tax laws for a more transparent and efficient system. Simplified tax filing process. Simplifying India's tax laws, a step towards global alignment. The complexity of India's tax laws. India's tax laws have long been criticized for their complexity and opacity. The country's tax code, which spans over 3,000 pages, is often seen as a barrier to doing business. The complexity of the tax laws has led to confusion among taxpayers, making it challenging for them to navigate the system. This complexity has also led to a lack of transparency, making it difficult for businesses to understand their tax obligations. The need for simplification. The need for simplification has been emphasized by various stakeholders, including the government, businesses, and taxpayers. The government has recognized the need for simplification and has taken steps to address the issue. The introduction of the Goods and Services Tax, GST, has been a significant step towards simplification. However, despite these efforts, the tax laws remain complex and opaque. Alignment with global tax norms. India's tax laws are not aligned with global tax norms. This has led to difficulties in doing business with other countries. The lack of alignment has resulted in double taxation, which can be a significant burden for businesses. To address this issue, the government has introduced measures to align India's tax laws with global norms. Key features of the simplified tax laws: reduced word count. The simplified tax laws have reduced the word count by almost 50%, making tax laws clearer and more accessible. Alignment with global tax norms. The simplified tax laws have aligned India's tax laws with global tax norms, enhancing the country's ease of doing business. The new bill will also introduce new sections to address emerging issues and concerns. The need for simplification. The current Income Tax Act, 1961, has been in place for over 5 decades. Over time, it has accumulated numerous sections, many of which are outdated and no longer relevant. The complexity of the act has led to confusion among taxpayers, making it difficult for them to understand and comply with the tax laws. The Union Budget 2025 aims to address these outdated provisions by introducing new provisions and amending existing ones. The budget also focuses on improving the tax compliance environment by introducing new provisions and amending existing ones. The bill aims to provide a comprehensive framework for the regulation of digital assets, including cryptocurrencies and non-fungible tokens, NFTs. The proposed framework will cover various aspects of digital assets, such as their creation, trading, and use. The Digital Assets Regulation Bill, a comprehensive framework for the future. The Union Cabinet's decision to clear the Digital Assets Regulation Bill is a significant step towards creating a regulatory framework for the burgeoning digital assets market. The bill, which is expected to be tabled in Parliament soon, aims to provide a comprehensive framework for the regulation of digital assets, including cryptocurrencies and non-fungible tokens, NFTs. Key features of the bill. The bill will cover various aspects of digital assets, including their creation, trading, and use. The new tax landscape. The Indian government has introduced a new income tax bill that aims to simplify the tax structure and reduce the complexity associated with it. The new bill has reduced the number of tax slabs from 7 to 5, with lower tax rates across the board. This change is expected to benefit taxpayers, particularly those in the lower and middle income brackets. Key features of the new tax bill. Fewer tax slabs. The new bill reduces the number of tax slabs from 7 to 5, making it easier for taxpayers to understand and comply with the tax laws. Lower tax rates. The new bill introduces lower tax rates across the board, with the highest tax rate reduced from 30% to 25%. Fewer exemptions and deductions. The new bill reduces the number of exemptions and deductions, making it more challenging for taxpayers to claim benefits. Fewer options for tax saving. The new bill reduces the number of options for tax saving, making it more difficult for taxpayers to minimize their tax liability. Income limited rebates income limited rebates. The new bill introduces income limited rebates, which are based on specific conditions. These rebates are designed to benefit taxpayers who are eligible for them. The conditions for these rebates are as follows. Eligibility. Taxpayers who have a taxable income of up to 5 Indian rupees lakhs are eligible for these rebates. Rebate amount. The rebate amount varies depending on the taxpayer's income level. The government has implemented a new tax regime that offers a reduced corporate tax rate of 15% for companies with a turnover of up to 400 Indian rupees crores. This new tax regime is designed to attract more foreign investment and promote economic growth. The new tax regime, a competitive advantage. The new tax regime is a significant departure from the existing tax structure, which had a corporate tax rate of 30%. The reduction in tax rate is expected to make India more attractive to foreign investors, who are looking for countries with lower tax rates. This is particularly important for companies that operate in the technology and pharmaceutical sectors, which are highly competitive globally. Key features of the new tax regime: a reduced corporate tax rate of 15% for companies with a turnover of up to 400 Indian rupees crores, a new tax deduction for research and development (R&D) expenses, a reduced tax rate of 17% for companies with a turnover between 400 Indian rupees crores and 1000 Indian rupees crores, a new tax deduction for expenditure on digital infrastructure. Benefits of the new tax regime: attracts foreign investment and promotes economic growth, encourages entrepreneurship and innovation, simplifies the tax structure and reduces compliance costs, provides a competitive advantage for Indian companies. Implementation and impact: the new tax regime is expected to have a significant impact on the Indian economy. The reduction in corporate tax rate is expected to increase foreign investment and promote economic growth.